Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indices, that being the S&P 500, followed by the Nasdaq100 and the DowJones30 futures chart. But just quickly before I start today's video, anyone who's interested in joining my Signal team over on Telegram, then make sure you visit my website dailymarketmovements.com. I've left the website link in the description of today's video. So if you scroll down and click on that link, it will bring you to this website. And if you want to join my Signal service, then all you have to do is scroll down and click on subscribe here under $29, and that will give you access as well to my daily market research that I post prior to US markets opening every single morning. But let's get started with today's video. We have here in front of me the S&P 500 currently trading at 4,858. We're just about coming up to an hour into the trading session here on Tuesday, and we've held gains, quite flat, but I think, flat is good here for the S&P 500. We're starting to see some consolidation after these humongous gains that we've seen dating back to October. If we see, from a percentage perspective, how far have we rallied since the beginning of October, and that takes us to about 18.5% we have gained in just over a 4-month period now. So that's pretty much 2 years of gains that you've seen in 4 months. So the fact that we're just consolidating these gains and we haven't yet seen any deterioration in this market should be taken as a positive. That being said, as we do enter into the 27th and 29th of January, that's an area where I think that you should highly consider taking profits, as I do have some cycles that do predict that we are going to see a slight correction here going into the month of February, and especially going into mid-March. And I think come mid-March we could see a 5 to 10% correction. And I think if we just quickly look on the daily chart here for the S&P 500, and we draw a fib extension from those October lows until current prices, I'm expecting the S&P 500 to go and back test the 0.5 fib area, which sits at around 4,475. So that would be a very big decrease in the S&P 500. If we do it from a percentage perspective, that represents a 7.75% fall from current areas. And I know, when the market is in its current position, it's very hard to believe that that's possible. But, there's lots of signs out there, including, for example, on the RSI, we do have some bearish divergence where the RSI price is moving lower, but we have the index price moving higher. And there's lots of other indicators which are screaming at me that we are expecting to see a correction in the coming weeks ahead. Nasdaq100, very similar to the S&P 500, bearish divergence going on here. We have the RSI moving lower, however we have the index price moving higher. That's very evident here on this chart. Currently trading at 17,340. I wouldn't short the Nasdaq100 here, just because we've seen some of these stocks outperform tremendously well. Look at Nvidia. Charts are not meant to look like this. We've seen also Microsoft. Excuse my chart, it's very messy, but just figuring out some waves structures here. We're seeing other stocks like AMD now trading at an all-time high. Other stocks as well, like CrowdStrike, for example. Apple's also performing very well as of recent, just knocking on the door to achieving new highs. So I wouldn't short the Nasdaq 100. I definitely prefer shorting the Dow Jones and the S&P 500 over the Nasdaq 100, but I still believe that the Nasdaq 100 is set for a minor setback as we work our way through the month of February and March, which historically speaking is a very weak time period in a election year dating back to 1950, so almost 75 years of historical data. And then if we just quickly look at the Dow Jones 30, very similar setup here. We have the Dow Jones testing the upside of this trend, and I think that we are set for a pullback as we work our way into the month of February. Two other charts I think you want to keep very close eyes on is the dollar chart. We've just come out of this 5-wave, any wave structure towards the downside, currently in this ABC correction. Now, what I'm interested in is this phase here, A to B. Could that potentially cause a bounce in the stock market, a further bounce? Potentially. That's why I wouldn't short just here. I would wait until February and March to take place. But eventually, I think that we are going to see another leg higher here for the US dollar before completely collapsing going into the middle of this year. And then, if we just quickly go over to the 10-year chart here for the 10-year bond yields, very similar to the US dollar. We've just come off this 5-wave structure. If I just quickly draw a quick 5-wave pattern for you, I think it looks something like this. Just very quickly. There we go. Sorry, I've messed that up a little bit. If we just did the 5-wave, 4-wave, and then we have the 5th wave, and it's my my personal belief that we are currently in this ABC pattern. So I think that we could potentially decline back down towards, let's say, 4%, but that's an area where we will find buyers. And I think that we've got the potential to go up and test 4.5% before we do see a very sharp decline in interest rates. But that's going to wrap it up for today's video, guys. I hope you've enjoyed. Don't forget, if you would like to join my trading signal group, then make sure you visit my website, dailymarketmovements.com. It will take you to this website where you can scroll down and sign up for a very small fee of $29. I look forward to welcoming you all over on Telegram. Thank you.